Hey, good afternoon, guys. This is Sam, and today I'm going to bring you an idea revolving around crude oil futures. So, crude oil has quite a few knock-on effects across the markets. Typically, if crude oil is going up, it's usually bullish for the markets in general. It's certainly bullish for all of the energy components within the market, and that's what we're going to focus on today. So, let's jump into the charts here, and we'll look at a couple of setups that work well with this trade. So, currently, we're going ahead and kicking it off here with the CL contract, and this is just a continuous contract for the crude oil futures, the daily contract. And if we zoom in here on price, we have a pretty good reversal setup that's happening here right off that $43 low. Very solid consolidation here between the Fibonacci levels on this chart. So what I've done is I just put a Fibonacci range there from the high right around 78 down to the low at 43. Pretty epic drop. And you can see there that price has rallied off the low, hit off the 38.2, bounced off the 23.6, and is trying to break out of that level. So pretty good pattern there all on its own, even without any indicators. But it gets a little bit better when we start looking at the indicators combined with the pattern. So what we're seeing here is a pretty good looking daily squeeze. The daily squeeze did have an upward bias. You can tell because the histogram is slightly blue here with these red dots. Indicating the direction of the bias, and then as of today we have a green dot on the squeeze indicating a daily squeeze fire on crude oil futures. Not only that, but what preceded this squeeze fire was a major ready aim fire signal that came in on the 13th. So these major ready aim fire signals combined with the squeeze, really powerful stuff. So this is what we're seeing here. I think that the target on this pattern takes it up to at least, in my opinion, 64 bucks. That's where I'm looking for a target on this. Now keep in mind that red line right up there, right up here around the 100% area, this comes in right around 63. So that the red line is a 200 period simple moving average for the daily. So that is a natural place of resistance. So certainly look out for that. But I think we're targeting this cluster here right around the 64.5 level. So what does that mean for the market? Well, one, it implies that commodities in general will typically rise when oil rises. You know, it's the largest commodity, so it's kind of a leading indicator of commodities right up there with copper. But more importantly than that, what's the trade? So the trade here, guys, starting off here with CL, we're looking at crude oil. If we know that crude oil has an upward bias to the trade, where do we want to go next? Well, we want to go to the energy sector, in this case, XLE. And XLE should look very similar to oil. Now, it's a little bit sloppier, in my opinion. The pattern is not as clean, but it does not need to be. Simply because if this index will follow oil. So keep in mind, our thought process is starting with oil. That is the key pattern that's driving this trade. And then we look for trades off of that. So XLE is your index for all of the energy companies, such as your Exxons, your Chevrons. But if you'd like a direct play on the product, not so much the companies, then we got you covered there as well. Because if you want to play crude oil, just the proxy contract for crude, then you go to USO. And here, exact same pattern as the CL futures that we started with. Very, very correlated product. This is the oil ETF. And on this one, certainly some $13 calls here, or a $13 upside sure does look in the cards. So there's a lot of ways you can play this here. Let me give you one more. We're starting with CL, and then we just understand all of the correlations that has across the market. So we started with crude oil. We went to XLE, which is the energy companies. I think that's a good play. Now we're looking at USO, which is the direct ETF for crude, which is the most direct play. Let's look at one more, and this one's going to be OIH. And OIH is your oil services providers. So again, this one does not have as clean a pattern, but it's following the general shape of crude, which should make sense. So I still like crude across the board, especially after what came out of Fed yesterday, where they're seemingly willing to just trash the dollar. A lower dollar helps crude. Also, just to add a little bit more color to this trade, we're seeing some reflation signals coming out of China. China is trying to reflate their economy by expanding their credit. So what does that mean exactly? Well, they're trying to they're trying to reinflate their bubble, the Chinese bubble. Now, China is a major consumer of crude oil. So all of these narratives play together. The original narrative that kicks this off is crude, and then we cover all of the knock-on effects across that. So these are some of my favorite names. If you take these ETFs that we looked at, like XLE or OIH, and actually break them down into their component pieces, then you can find a specific trade that works well. So XLE, a trade within that is XOM, ExxonMobil, CVX, Chevron. In terms of the OIH, trades there would be something like RIG or SLB, things like that. So that's the trade that we got for you guys. Hope that was helpful, and we'll see you for the next one. Cheers.